The evidence suggests that inflation is coming back to target. We've seen wages growth come off, and that is enough for us to think that we're around that level of full employment. Where the RBA differs on that view is they think it's around 4.5%. So we're obviously getting close to that now, but still they would characterize the labour market as having some tightness, is the way they're kind of framing it. And that implicitly means that they think the NAIRU is still a little bit higher than the current unemployment rate. But if you dig into how they sort of estimate these things, they use these complicated models that use a lot of data from back to the 80s, and they just essentially take time to for that to flow through to the NAIRU coming down. And because of that, we need sort of a few years of data for them to be confident that the NAIRU has sustainably come back down to maybe the low fours. And they're not confident enough to yet to go out and say, yep, the NAIRU is at this level. They have to sort of trust their models, and the models take time to adjust. But I think if we have this conversation in, 2 years' time, and we did get inflation back to target with the unemployment rate around the current levels, you'll probably see their models continuing to come down, and then they'll be more comfortable with saying, yes, the NAIRU is in the low fours and around the current level. But they have to be cautious because they don't want to get caught on the hop if they turns out that their models are right and then inflation does reaccelerate.